Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Nikunj Dalmia. And the closing trades are looking okay. Yes, we are off the highest point of the trading session, but we are now trying to claw back all the losses and just around the flat line as we speak. Another day of range-bound trading session coming in for the Indian markets. But at least we've held our head above 19,700 throughout the trading session and inching closer to 19,800 as we speak. It's the real estate sector which is slipping in trade today. So DLF, of course, that block deal impact coming in. But then Oberoi Realty, Godrej Properties, these are the other counters on the back foot, and Realty being the top drag in terms of sectors. What's bouncing back today is clearly IT. So whether it's an L&T Tech, a Tech Mahindra, Coforge, all of them are fairly excited. Tech Mahindra, of course, there's a news flow about the probable CEO coming on board, and that is providing a bit of a support to Tech Mahindra. A bit of divergent moves coming in for power stocks. We have been chatting about NTPC. That one is flying away in the trading session, one of the top gainers on the Nifty. But Power Grid, that one is coming under a lot of pressure today. A 5% cut coming in on Power Grid. Nothing that bad in the earnings. But do remember the stock has run up already, so it's seeing a bit of a profit booking today. Auto numbers trickling in thick and fast. We just got numbers from Bajaj Auto and M&M. M&M surprised positively, so should be reacting positively. And Bajaj Auto was a bit of a miss. And overall, the auto sales have been fairly mixed today. Can't really take any cue in terms of how the sectoral trend is, but nonetheless, that's how the setup is of the trading session. And Nikunj, this is what we have been pointing out, right? That there is going to be a bit of rotation, there is going to be a bit of pause and profit booking that is healthy for the markets.
See, pause is good news. I mean, for me, pause is a victory for the bulls. I'm again insisting that look at global cues before you take a view on the market, because it's, you may look back at the market and say, okay, we've done something special in the last couple of months. Of course, we've done. But it's not that, you've done in a silo. 2022, world came down, you were outperforming. 2023, parts of the world have done much better than you. And I think we've exactly done what emerging markets have done in terms of MSCI comparison. So you actually are in a situation where the first cue of reversal will be global in nature. It could be macro based, it could be largely because of what's happening to the US markets. Having said that, I think the markets have clearly hit a pause button. Nifty last 5-day range I think is about 350-400 points. That's nothing. That means you're jumping in the same place, if you frankly ask me. The market is now moving into that one-trick pony kind of a situation where it's only FI flows, the only number which you look at, because triggers and earnings, that's over. And then you got participation which perhaps is now increasing in small and the mid-cap stocks. So I'll tell you what I don't like about the market. What I don't like about the market is, and Kunal, you may just want to, maybe look that as a trend. Look at the top traded stocks on National Stock Exchange today. You got the real penny stocks here, stocks which do not fundamentally make a lot of sense why they're going higher. I'm not getting into specifics, but anybody can look at the screen and look at the top traded stocks in volume terms. And those are the stocks you do not want to relate to. All of them are up. All of them are trading on strong volumes, and all of them have seen volumes which are higher than the average. That is my big canary in the coal mine of what I don't like.
Yeah, I think that's a very valid point, and this also complements with the point that the indices are absolutely sideways. So, Thursday previous week, we were almost 100 points down on the Nifty, 114 points down on the Nifty. Subsequent day, we had a flattish kind of a day for the index. Yesterday, we had a 100-point uptick on the index, almost 94, 95 points uptick on the Nifty. And today, we are almost at a flattish zone for the Nifty. So, I think what we are seeing in the last 4 or 5 days is just, here and there movement for the indices, but no major breakout or breakdowns for the index. We are still largely at 90,700, 750 mark, which is the midpoint of this 90,500 to 20,000 range for the index. So we're not expecting any major gyrations on the index over the near term. And add to that, the last 5 months we've seen consecutive positive close for the index. So it's bound to be that we'll hit some patch of consolidation, maybe a mild correction into the index. That's, I think, a natural course of trend for the index, and I think that's where the action would be more stock specific.
Why are Escorts profits up 100%? I don't know. Let's look at the fine print before we decide. But for me right now, what is important is that Escort numbers have just come out, and prima facie, if I look at it, I mean, I don't have the income statement with me, but looks like there is a 90% uptick.
Yes, there is a sizable uptick on a year-on-year basis, 280 crore on a standalone basis, 148 crores. And prima facie, there's no exceptional item. Yes, the other income has jumped up to 95 crores versus 35 crore, but looks like it's an operationally better performance coming in because the top line is also showing healthy growth. So yes, there's a support of other income coming in, but looks like it's a decent set. Of course, we'll have to wait by and get more details, Nikunj. But first up, looks like an okay set. The profitability much higher on a year-on-year basis. Okay, so that was about Escorts Kubota, but then there are other stocks as well which are in the news flow. So let's take stock of the stocks in news today, starting with some of the earnings itself coming in. It was a strong set of numbers from Kirloskar Brothers, but on the weak side you have Power Grid, KEI, as well as Oberoi Realty and KPR Mills. So we are watching out for all of these counters. Navin Fluorine is surprisingly up 7%, and the tide turned after the con call really, and the management says that not much downturn seeing on account of destocking, and the CDMO business is on strong footing. That's the reason that stock is higher by 7%. Hero MotoCorp, that stock has taken a bit of a nosedive. It's recovered from the lowest point of the trading session, but still seeing a cut of around 3%. The reason is that the key managerial personnel, which is Pawan Munjal's, his residence has been searched by the ED, so that's having a rub-off impact on the stock price of the listed name as well. So Hero MotoCorp in focus on account of that. But Naresh, just quickly wanted your view in terms of the charts of Navin Fluorine as well as Hero MotoCorp.
So Navin Fluorine is more a single day price action. The stock had corrected from 4850, 4900 towards 4200 over the last 3 months. So today post the numbers, the stocks are a price action, which is a reversal. But I would wait it out. There should be some fade off tomorrow and the stock again slowly drifts lower. So not very positive here. Hero MotoCorp is interesting for the fact that the structural trends are positive. The last time also it was an opportunity to buy at 2800, 2850 when there was a similar income tax announcement. So the structure of the stock remains the same. Any clarification going forward could create a bounce back. The view is 2950 to 3050 remains an extremely important support. So closer to that zone, you want to keep buying. Today also the stock came closer to those levels. Structurally, the setup is for a move towards 3600 levels. So buy at current levels as well as on dips.
So that's the take coming in as far as Hero MotoCorp is concerned. But looking at the auto data that we have got so far, Sudeep, what's your takeaway? Because, M&M has surprised positively while Bajaj Auto continues to show a bit of sluggish move. Do you think that's the trend to really watch out for, that M&M will still be the leader of the pack?
We have been positive on M&M for quite some time, Anisha, and we maintain our stand. In between this, announcement regarding a stake acquisition in RBL was a bit of a dampener, and some amount of correction, some amount of concern was expressed by everybody in the market, and that still remains a question mark. But beyond that, I think they are ticking all the right boxes. They have been doing everything which is, which they should be doing. Capital allocation has been improved significantly. The unrelated diversification, all foreign subsidiaries have been exited. The tractor business itself is doing well. SUVs, new models have been launched, and EV business they have put a lot of focus. It's progressing rapidly. Today's announcement, like EV battery testing facility in Chennai, I think that's also a development in the positive direction. The numbers are coming good. So yes, Mahindra we believe, and we can, for a long-term investor, I think it's a good buy even at current levels. As far as Bajaj Auto is concerned, the problem continues to remain the exports. It was a big positive for Bajaj Auto up to a point in time, but since the export markets, there are some challenges. They are suffering. But I will not say they are down and out. I think they are also trying to do a lot of good things. But I'll wait and watch. Won't jump into it at this stage. Maruti, of course, there are some question marks. The margin was under definitely pressure. And we have to see this announcement regarding 100% acquisition of the Gujarat facilities of Suzuki Motors. We have to wait for the board meeting and the specifics before we take a call. But at this stage, I will not enter Maruti.
29, 25, 90 for Escorts. That is the stock of the day. Kunal? Escorts.
Yeah, I think it's a good move. It's not talked about stock from the auto pack.
5% ऊपर से नीचे से ऊपर हो गया.
Yeah, but then I think on closing basis will be again flat 1.5% on Escorts. But I would believe that it's about the way in which the stock has approached. So, we don't talk of Escorts at the same length like what maybe Tata Motors or Bajaj Auto, etc. these stocks have done. But even Escorts has done exceptionally well over the last 6 months, over the last 1 year. The stock has moved up quite well. So I think it doesn't come as a surprise, the reaction of the stock price on the back of numbers. Now the key important level is the 2,600 mark for Escorts as a price level to watch out for. Over the last many days, we've seen many of these auto stocks actually taking a pause for themselves. So hoping that if Escorts doesn't stop at this 2,600 mark, we can expect another 100 to 200 points up move on the stock price. But for that, 2,600 level has to be taken out.
20-year chart or 10-year chart for Escorts. We don't talk about it, Anisha. This was again one of those big investments of the great Rakesh Jhunjhunwala.
Oh yes, right, of course. Yes.
They bought at 150, I think.
150, wow.
150 or 200. Let's look at the 10-year chart for Escorts, please. My producer will fire it.
Actually, while they bring that up, let me talk to you about that. In 2016 as well, the stock was trading at just 140 levels.
Yes,
and look at that move, 500%. That you have the chart details. Now let's bring that up again,
no,
please,
150 has become 2,500. So it's almost like 20x. I mean, 15x.
Yes.
15x.
15x, yeah.
15 into 15, 225, right? I mean,
correct,
simple maths.
Yeah.
So
True.
it's 15x.
Yeah. So in
Yep.
10 years.
15 years, no, 10 years, it will be more because we are looking at 2015, right? Now, this is the 10-year chart for Escorts. A 50 rupee stock has become a 2,500 rupee stock. And what do they make? Tractors. Nothing very specific,
Yeah,
nothing very special. Yes, the change happened, but the change in Escorts happened, I think, post-COVID when they sold the majority stake to the Japanese, firm there. And I think that change happened just at the peak of the COVID crisis, closer to 1,400 or 1,500, I think the deal went through. We'll have to do a Google here.
Yes.
But, Sudeep, we talk about Bajaj, we talk about HDFC Bank, we talk about, so many great companies in India, but we don't talk about Escorts in the same way. And the data is there in front of us, Sudeep. 10-year is not like once upon a time.
You're absolutely right, Nikunj. I think it's a fabulous story. Honestly, I also never used to track too much this stock. But this Kubota thing, you're absolutely right. That probably has been the game changer. Not that it hasn't moved up before that, but I think the Kubota thing has become a game changer. And I think it is now attracting all kind of attention. Also, I must say that the overall tractor sales have improved quite significantly over the last 1.5 years. Leave aside 1 month or 2 months when it was down, but by and large, we can see the same getting reflected in Mahindra's numbers as well. And, the unlisted Sonalika, in the industry forums, those numbers also do come. And pretty much everybody is showing a good traction as far as tractor numbers are concerned. Of course, there is a significant opportunity for all these tractor manufacturers in agricultural machinery segment, which all of them are talking about. Mahindra has been talking about, Escorts have been talking about. We'll have to wait and watch. I also believe that there is a significant opportunity for all these guys to export and become a manufacturing base for the foreign collaborators, or become a supplier to global markets. As far as Escorts is concerned, with Kubota coming in, that is very imminent. So one has to keep watching this space very, very carefully.
So that's the take coming in as far as Escorts Kubota is concerned. But time now to slip into a very short break. But as we do that, listen in to what the management of Nestle had to say about their future plan and the volume outlook.
On any matrix of their strategy, penetration-led volume growth, if you take the last 6 years or 7 years into account, we have had an average organic growth of about 11%. Almost 7 to 8% of that has been volume growth. And it is that penetration-led volume growth that is the core strategy of the company also going forward. Why do I put it in that context? I put it in that context because many of our categories still enjoy the benefit of low penetration. A Maggi noodle, for example, has got an annual penetration, which is consumers who buy it at least once a year, of 80-85%. When it comes to a monthly penetration, it is 40-45%. Similarly for coffee. Again, annual penetration much higher, monthly penetration much lower. And the second phenomenon, Nikunj, which is now becoming exciting for us, is Bharat is discovering the brands of Nestle. So earlier, we were, as you would recall, largely a metro and a mega city company. Today, we are into the lower town classes, TC1s, TC2 to 6, and rural India, and enjoy about 20% of sales coming out of these rural markets.
And we are in conversation with Sudhi Bandyopadhyay, Kunal Bothra and Naresh Mirani. Naresh, I'm just fascinated. I'm stunned and I'm bedazzled by this move in Escorts. And I'm not looking at today's price action. I'm simply saying that here is like an auto company which was doing the same thing 10 years ago and doing the same thing now. But what has changed is the stock has gone from 50 rupees to 2,500.
So this is what happens when stocks consolidate for no returns for 20 years. So Escorts, I think, was part of the original Sensex also. And it is a company listed back in 1994. And you would be surprised to know that the stock used to be same 50, 100 rupees back in the 90s, then in 2000, then in 2010. So for a period of 20, 25 years, the stock did nothing. There was a huge perception issue for the stock. That became a game changer point around 2014-15, where they started selling off one of their non-core assets, and then you had an entry of few. The first one is RJ, and then you had a lot of institutional interest as well. So that's gone through the whole cycle of being totally disregarded. The stock used to quote at extremely low price to sales and all parameters. And that was the change in 2014 to 16. And then we get to the next point. Eventually, the stock. There was a stake sale to the Japanese Kubota. So now we are getting into a phase that it is now an institutional stock. The stock rallies along with the markets, along with the sectoral trend. There was a phase in 2021-22 where it went sideways after the deal. But now we are back in an uptrend. We've just crossed about the previous all-time high for the stock was 2350, 2400. So a fresh uptrend here. Going forward, any fade off to 2500 to 2550, 2450 would be a buy. The trend still remains positive for the stock.
I want to talk about today. I'm just looking at multibaggers. When you look at the data, you said, oh my God, how come we didn't realize it? Raymond's, 10 years, 10 times. Now look at the journey of Raymond's and let's stretch it up. If you actually see Raymond's, it was at 183 in 2013 Jan, and it was again 183 in June 2020. So for 8 years it did nothing, but that 183 has become 1883 in a matter of 3 years. Wow.
Yeah, I think this last 3 years.
You've been wearing Raymond suits for more than 20 years.
These last 3 years have been just tremendous for Raymond. I've been tracking the stock for the last 3
years. Next बताओ कुणाल, तो ठीक है, Raymond, Escorts पुराना हो गया. सुदीप भाई से पूछे, सुदीप भाई, this is academic, right? Escorts, Raymond's. Kunal, I'm coming to you. Right? So you're not getting scoot free. And Naresh, I'm coming to you also. What we are discussing is theory. Let's do practical now. Next Raymond, next Escorts. And Sudeep, you can't say I wish I knew.
No, I'm not going to say that. I think there are two stocks which are in my radar and which I believe can go to different places from where it is today. One is Godrej Consumer. I think this stock hasn't done anything and is not doing anything. Now the new CEO has come. Things are.
Oops, did we lose him then after Godrej Consumer? अरे यार, multibagger आ रहा था. Okay, Kunal.
Well, there are a couple of names, Nikunj, which I've. So Tata Motors, of course, was one of them, 2020. But I think from current levels, I would probably look at L&T Finance and AB Capital. These are the two top names which I believe on the charts. They look very, very attractive on the long-term basis.
Kunal, when you look at the stocks like Tata Motor, you have really hit it out of the park. Great call, and I'm sure viewers have benefited. When you look at AB Capital and L&T, these are calls which are based on what? Pedigree of the company, change of management, or this is a pure call which is based on your analysis of time as well as price?
Pure technicals. This is pure technicals.
Okay. There is nothing like, Vishaka Muilis comes, it will change, or this.
So I have been bullish on AB Capital prior to the change in management. much prior to the change in management.
So why have you identified these two stocks? What is so similar and what is so unique about
So
them?
there are time cycles which changes when stock prices hit a certain resistance. So typically we see that stocks remain into a in a limbo to speak so for years on a trot, where there is no major trading activity, no change of volumes, no major interest by buyers, and then all of a sudden you see the price activity starts to increase, intensify, and that's what we call as the inflection point for stock prices. That happened for many of the auto names in 2020 second half, when there was a lot of negativity and pessimism, but the prices were showing a different picture altogether. Same is the case, which I believe I would probably forecast for stocks like L&T Finance and AP Capital.
Naresh?
So for me, that is Welspun Group and Welspun Corp. A disclosure, I do own the stock as a core portfolio position. The stock was at 230 to 300 rupees back in 2007. It was at 230 to 300 rupees in 2009 to 2010. Pre-COVID also, the stock came to 230. Even in 2020, when it came to 230, it did spike to 300, went down below 230. And this is a conglomerate which has been around for the last long period of time. Continues to be a perception issue. Now it is a company which has two more companies got into NCLT, which is ABG Shipyard as well as Syntex Plastics. So an interesting chart formation. The last time the stock was at 300 was back in 2010. So what we look at in terms of technicals is when a stock or a sector comes out of a 10, 12, 14 year breakout, that is the time it surprises. Something what happened to Indian hotels at 150 rupees or HUL at 350, 400 rupees many years back. So this is a group and a stock which looks very promising with a 1 to 3 year view.
Sudeep, we got first name from you and you said you got one more. And why don't we complete that conversation?
The conversation was on Godrej Consumer, Nikunj, and I believe this is a stock which I think last 5-6 years they haven't, it's pretty much hovering in a range, hasn't done anything. Results have been, so. Now the management has changed, and remember they have a well spread out business across different geographies in the world. They have a nice product basket. Few things needs to get right, which I suppose the new management will be putting in place, and there will be a breakout at some point of time. So Godrej Consumer definitely is one stock which is worth looking. The other stock, I will mention, I think is everybody knows about it, but nobody looks at it that seriously. I think is Reliance Industries. It's also in a range. If you see, during the COVID, when all these Facebook and Google came and acquired stakes, it's moved up quite a bit. But after that, it has been hovering in that range. It has moving up and down in that 2,000 to 2,900, that kind of a range. It's got multiple businesses which over a period of time they will segregate. I don't know how they will segregate, whether they will be separately listed, separately handled. We have to see how things are done. But the Geo platform, which is a telecom business, will get separated. Retail will get separated. Green energy will get separated. So all this, and financial services already has become separate. So there will be actually 5 businesses, 5 large conglomerates coming out of Reliance, what is today. So at some point of time, we will have a significant value upward movement in the combined entity. Maybe it's 5 entities put together. So a shareholder today probably will get the benefit of that over a period of next 4-5 years.
Those are the two gems coming in from Sudeep, Godrej Consumer as well as Reliance Industries. Those are the multi-bagger ideas. In fact, taking a look at the market, we have come off a bit. We are still holding on to 19,700 and Reliance seems to be that culprit for now because that's now trading at the lowest end of the trading session today. But time now to step into a very short break. When we come back, we talk about the earnings of Adani Total Gas with the management.
All right, you got a 20% surge in urban smart spaces. They've signed a development pack for townships in Ahmedabad. I must confess, I don't track this one, so we'll let it go. Suresh P. Minganali joins us now, Executive Director and CEO with Adani Total Gas. Suresh, good morning. Thank you for joining us. Good set of numbers. My question is that how do you see the gas price trends and how do you see the impact of the new domestic gas price formula, which was approved earlier this year in April 2023.
Thank you. Thank you for inviting Adani Total Gas on your channel. And thank you for the compliments for the good result of that ATGL. See, as a city gas distribution company, which is serving the large masses with supply of piped natural gas and the CNG, our always wish is that price trend should be moderate. It should keep coming down so that we can provide more and more affordable PNG and CNG to large number of our customers. Our group chairman at Gautam Bhai and Patrick Pione of Total always have a vision that Adani Total Gas should provide reach to the PNG and CNG to the large masses in India and all over 33 geographical areas. One of the key support which has come from a government in terms of 60% of our volume, which we provide to homes and the transport vehicle as a CNG, is that government approved the revised pricing reforms in early April, which has brought the cap of $6.50 and floor of $4. And they have stabilized the price for 2 years. So this certainly has brought a significant support for all city gas distribution company to provide more affordable PNG and CNG. And you would also see that because of this affordable price, we immediately pass through the entire benefit to the consumers. And we saw 18% growth in CNG volume. We are also seeing the momentum picking up in PNG. We wish to see moderation of prices in RLNG prices and the domestic gas, which is being produced in India. Currently, we are seeing the moderation happening on the prices, and that is a good support for the CGD industries.
And also hopeful of a price moderation going forward, and you talked about the demand being robust and the vision being laid out too. So in context of all of that, talk to me about what's the capex plan for the company over the next, let's say, 2 to 3 years, and what's a large commitment that you're making with respect to that?
So as we have been always making a statement that Adani Total Gas has 33 geographical area in India, which translate into 94 districts in India where we have a licenses from our regulator. So we have made a complete blueprint of providing PNG to the large number of homes in these 33 GAs, CNG to every nook and corner of the geographical area, 33 geographical area, and also we are encouraging industries and commercial restaurants, hotels, commercial consumers to embrace the cleaner fuel pipe natural gas. For doing all this, we are developing a backbone infrastructure of pipelines, setting up stations. So we have made a plan of around 15 to 20,000 crore in the next 7 to 8 years period, going forward from this financial year onwards.
15 to 20,000 crore worth of capex lined up and looking at increasing the commercial use of that gas as well. But the last time we spoke with you, sir, you talked about how you formed 2 special purpose vehicles for EV as well as biomass space. Could you help us with an update on that?
Yeah, so in the last Q2 of 22-23 financial year, we incorporated 2 100% wholly owned subsidiaries. One, Adani Total Energies E-Mobility Limited, and another was Adani Total Energies Biomass Limited. So one, E-Mobility is setting up EV charging stations across the country. And I'm very happy to inform to your viewers and our shareholders that within very short period of a time, we have been able to spread setting up EV charging station across many highways, many cities, and also on a B2B basis in airports and several other places. And we are also setting up some of the EV hubs. So that E-Mobility company is started spreading and accelerating the setting of the charging stations. We have laid down complete blueprint of accelerating the further setting of EV charging station across India. On the biomass side, we have SPV, Adani Total Energy Biomass Limited, which is to ensure that we set up agri-waste and the MSW-based biomass plant so that we can produce the compressed biogas and the organic manure. So we are already setting up India as one of the largest biomass project plant in Barsana, which is near Mathura. We are likely to see the phase 1 of the project getting commissioned in this financial year, 23-24. And we are developing blueprint to also work with the municipalities in various parts of the country to see how do we transform MSW waste, which is municipal solid waste, which is getting generated in homes, in restaurants, commercial places, to the creating the wealth from the waste and producing the compressed biogas. So our plans are intact. Investments are already allocated. Capital has been allocated for both the SPVs.
Now, LNG as fuel for transportation is gaining traction with many industries like steel, cement. LNG is also being used in trucks now, transportation. So LNG is already an established solution for heavy fleet, and it has been in use for more than 10 years in Europe and China. What are your LNG plans?
So, as SPV of both Adani Group and Total Energies, this is one of the DNA we have, that we sense the all challenging areas which we transform in opportunities. And this is another area which is emerging now in India. We are seeing the policy reforms happening. Regulator has permitted LNG for transport fuel as a liquid form, as any company can set up anywhere. So we are exploring these opportunities of now venturing into the setting up of the LNG stations for fueling the long-haul vehicles, which is, as you said, trucks, buses. Around, as you see in India, around 40% of a diesel consumption is being done by the long-haul vehicles and the trucks and buses. So we see a bigger opportunity coming up to our way, and we are exploring to see how do we decarbonize transport sector. As you said about cement, steel, and many, many more corporates and industries are using large number of fleets. So we are working with a number of industries and discussing with them to see that we provide a value proposition for converting from their diesel vehicle to LNG, as well as encouraging them to now, whenever they are looking at the supply chain solution or the transport solution, they look at more decarbonized solution, either on a EV-based CNG or the LNG, and ATGL will provide multi-fueling options to the all industrial consumers. So the plans have been made for setting up LNG station in various parts of India, and also wherever industrial partners come along that they want to decarbonize their fleet, we are willing to set up dedicated LNG stations for those plants as well.
Manglani, for joining us with that take on what's happening with respect to the company going forward, and best of the wishes for the outlook as well. But shifting focus to what's happening in the market for now, it's IDBI Bank, which is perking up 9%. I think the numbers are there over the course of the next 2 to 3 days. So ahead of that, we are seeing some sort of build-up happening there. And a couple of these railway stocks again are buzzing. So IRFCL, or Indian Railway Financial Corporation, is up around 7%. RailTel Corp is the other one, which is gaining ground. In fact, talking about some price volume buzzers, look at Hindustan Copper. That stock has been on Kunal's radar as well. It's hit a 9-month high on an intraday basis and has been forming higher highs and higher lows for 6 sessions. Volumes too, very, very heavy, almost 5 to 6 times the 20-day average. Not just that, you also have Exide Industries, which has hit a 4-year high on an intraday basis. It's been advancing for 6th straight month, and the volumes today are 5x the 10-day average, and DLF2 has managed to snap out of the 4-session gaining streak. The volumes today, of course, are on the higher side on account of that block deal happened, wherein the promoters have offloaded almost 0.9% stake. Naresh, quickly your view on these three counters, Hindustan Copper, Exide and DLF?
So in terms of Hind Copper, the stock has already done say a large move in the last 2 sessions, so the risk reward is not great at these prices, so would be an avoid. Time to actually take some profits off the table. DLF is interesting. The stock has made a multi-year breakout. Going forward, 470 is a support, so after the deal, any dips closer to 480 to 490 should be a buy. Looks promising in the longer term charts. The last time the stock was here was back in 2009 odd period, so the stock has crossed a 10 to 12, 13-year high. So looks promising. A fade-off move towards 480, 490 would be a buying opportunity.
Mahantesh Sabarad also joins us on the show, so let's discuss what's happening in the market with him. Mahantesh, of the latest earnings and the auto sales that we have seen, what has stood out to you in terms of the big earnings of the last couple of days or the auto sales data? Anything that stood out?
So basically, in terms of auto sale numbers, what you can definitely notice is that the sales are growing quite sharply. This is partly because of the COVID effect kind of wearing off and a lot of pent up demand coming in. Having said that, in terms of results, the expectations were very high. The bar set for results from most companies was typically very high, and I find that many of these companies have not necessarily met the expectations, although they have done well compared to what they were doing last year. There's a definite growth both in terms of top line and bottom line, but that is not enough when it comes to the expectations. And that's why somewhere some of these stocks are running out of steam. I reckon that for the year ahead, probably the automobile industry will find the growth a bit more challenging. It will be muted, both in terms of volumes as well as in terms of profitability growth. So one has to take a further deeper call in terms of what other prospects lie ahead for automobile companies, both in terms of, let's say, new plant announcements or new model announcements and things like that.
Okay, let me now get you some exclusive information, and this is something we are picking up in Sirma SGS. My colleague Vinny should be joining us shortly to talk to us about. They have lined up one acquisition, it seems. Of course, the board is meeting today to consider the earnings, and that's why it's probable that this announcement might come soon as well. Vinny, tell us what the expectation is and what's the buzz that you are hearing?
Yes, so what we are picking up from our sources is that Sirma SGS is soon, and this announcement is expected, is that they're likely to acquire an earphone manufacturing company. This earphone manufacturing company manufactures earphones for MNCs. Some of the MNCs are their top clientele as well, and they have a revenue of 600 crores. It's a Jodhpur-based company is what we're understanding from our sources when we had spoken to Sirma SGS, and we've asked them for the comments. They've said as of now there are no comments that have come in from this, but do not forget that the board meeting of the company is today, where they will be declaring their annual results as well. Their Q1 numbers as will be coming out from Sirma SGS as well. But this is the exclusive news that we're picking up, that Sirma SGS is likely to be acquiring an earphone manufacturing company. Now, currently, when you look at it in terms of Sirma SGS, the consumer side of the revenue mix is around 32% of their revenue comes in from the consumer side of the products they give to consumer companies. So yes, maybe that addition could come in over there. And Sirma SGS FY23, the revenue was at around 2,000 crores, just about the 2,000 crore mark as well. So yes, this will be a good addition in terms of top line. If it's a 600 crore top line from the target company, that's a big amount in terms of revenues that is coming in as well. So this announcement is likely to be made very soon, keeping an eye out on Sirma SGS, because surely they have been focusing on that inorganic growth, and they've made a lot of acquisitions in the recent times as well. Seems like one more addition is going to be added to Sirma SGS, an earphone manufacturing company, keeping an eye out on Sirma SGS.
Sudeep, what is the right way of looking at some of these electronic manufacturing companies? These are, oh sorry, Sudeep's gone. Mantesh, I'm so sorry. Just a bit of, Tuesday lazy afternoon effect has kicked in. Mantesh, these EMS companies have seen a very strong growth curve, whether it is Shirma or Keynes, Dixon or Amber. How much of the gains are realistic?
So, one thing you should remember, there is the new PLI scheme that has kicked in well for most of these manufacturing companies, particularly on the electronic side. And you will also notice that India has started exporting a lot of electronic components as well as electronic manufactured items. So the export trend is quite sharp. So from a demand perspective for many of these companies, some of which may not necessarily be exporting, but then the demand component is actually growing up quite sharply for the electronic manufacturing industry. And hopefully, as this trend starts catching up, you will see bigger moves or bigger gains in terms of overall sectoral growth, overall profitability growth, and so on and so forth. The only drawback one needs to be aware of is that in electronics manufacturing, technologies change rapidly, and you need to adapt your product quite swiftly, quite sharply. And if that adaptation doesn't happen well, or it comes with hiccups, probably that run may not necessarily be smooth enough. That rise may not necessarily be smooth. So that's the only risk, that factor that I would look for when it comes to electronic manufacturing companies. Mere capacity creation is not necessarily a big driver, or incentives coming in the form of PLI is not necessarily a big driver for them. Somewhere the technology aspect has to be looked at into, dwelled into really well.
For that technology competency as well, and not just the capacity addition and the PLI, but the other stock that we are watching out for is Tata Coffee. Let's go across to Sharad to try and understand what the buzz is in the dealing room around this one. Hi, Sharad.
Well, yes, in focus we're having Tata Coffee, and what we are hearing from the dealers is there has been a buying coming in from the domestic institutions for this counter. And do remember, the already two important DIs which are already invested in the company include the names of Nippon India Mutual Fund as well as Quant Mutual Fund. Now it's expected that the international coffee prices are expected to go up by as high as 10 to 15% over the next 1 month itself. And over the last 1 week, if you see the prices, that has actually gone up by almost 3%. Now why this is important is because most of its sourcing problems are happening in the two countries, especially of Brazil and Vietnam, and the company itself is actually dealing in the refined coffee market and not largely on the cocoa market. So because of this, the exports are expected to go up and higher realizations would be there for the company. Now the company itself, of course, would be in focus because Tata Consumer Product already has almost 58% stake in the company, and the stock itself on a technical basis also is seeing a monthly breakout after 2 years. Now recently the management came of Tata Consumer Products to ET now, and they have stated that the merger between both the companies is expected to be closed by FY24, and they expect the NCLT approval to come as well.
Sharad, we'll watch out for all of those details that you highlighted, but that's something which is definitely on the radar in dealing rooms. But KEI, that's the one that is coming under pressure, and the reason is that the company has underperformed versus its peers when it comes to the cables and wire business, because for KEI, the growth in the quarter gone by was 13.5%, and we should pull up that comparative data that we have made for the company, because when you compare it with Polycab, it reported a 48% growth on a year-on-year basis. Havells reported a growth of around 25%, and KEI has managed to report a growth of just 15%, and that's the reason that stock is coming under pressure. Mantesh, have you been watching for this entire cables and wire space?
Not necessarily, but the entire manufacturing space is really doing well. Yes, some of these cable and wire companies are doing quite well.
Enough. So that's a take coming in as far as some of these cables and wires companies concerned. What else is happening? Well, results which are lined up tomorrow for Titan as well as Indigo, and Indigo will be very, very interesting because after the 48-hour period of the earnings gets over, there will be that overhang of the stake sale coming in. Quickly, let's go across to Somit to get the understanding of what the numbers are going to be, because the quarter gone by.
Well, the June-ended quarter is expected to be one of the blockbuster one for India's largest airline, that is Indigo. Revenues are expected to be higher by nearly 13% compared to last quarter. EBITDA adjusting for forex loss is expected to be higher by around 85% to close to 4,600 crore rupees. Margins are expected to come in at close to 29%, while the net profit is expected to see a jump of nearly 2.5 times to close to 2,322 crore rupees. Now, this expected net profit number of 2,300 is actually higher than the highest ever annual net profit reported by the company in FY18 of close to 2,240 crore rupees. So this gives you a sense of how good the first quarter of FY24 is expected to be for Indigo. Now, why the company is expected to report a blockbuster quarter? While it will be on the back of higher air traffic, higher yields which measure the average fare per passenger per kilometer, higher passenger load factor which is the capacity utilization, while lower oil prices and stable INR would help Indigo to report such a good quarter, good numbers. Now, if you see the average daily air traffic stood at higher by around 2%, passenger load factors improved by around 600 basis points, yields which measure the average fare were up by around 6% in the first quarter of FY24, while oil prices, which is one of the biggest cost expense for an airline company, was down by around 21% compared to the previous quarter. However, do remember that the first quarter numbers were very strong, but the same positive trends have turned negative in the second quarter, and that's the one of the most important thing to watch out for from the management commentary, and that is how much of this first quarter numbers can be extrapolated going forward is something that investors would be watching out for. Along with this, what are the current trends in the domestic and the international segment? What is the any commentary coming in from the compensations from OEM related to grounding of aircraft? What is the guidance on yield environment for FY24? What is the impact of higher yields on demand, and how are they benefiting from Go First shutdown would be important to track from Indigo conference call.
Kunal, we don't talk about Indigo that much, but frankly, this stock has done rather well for itself, and it has not fallen apart even though crude is at a 3-month high.
Yeah, it's not fallen apart. It's made a fresh life high. I think last month or so, when the stock had crossed 2005 400 mark, which was the previous high in 2019-20 for Interglobe Aviation, the stock fell down to as much as 1400 and then came back towards 2400 plus mark. And the recent high for the stock was 2600 plus, if I'm not wrong, for Interglobe Aviation. So yes, it's done exceptionally well. It's been a consistent performer. So the quality for a stock like Interglobe Aviation is that it goes into very slow, gradual phases of uptrend, but they are more consistent for the stock price. It tends to last for a stronger or longer period of time, and in those consistent up moves, the stock easily breaks past about the previous highs and then scales up by 10% margin. So what we are seeing right now in the last 1 month or so is a patch of consolidation which has come back after such a steep rally for Interglobe Aviation. Hopefully once that is over, we may expect the stock to trend again.
Okay, just wanted to quickly understand what the expectations are from Titan as well, because of course the operational data was already out, so we're not waiting by for that very closely, but what we do want to watch out is the margin performance coming in from Titan. Let's go across to Vinny to get those internals as well. Hi Vinny.
So yes, in terms of numbers that we're expecting from Titan, we have a fair idea of what to expect because of the Q1 operational update. So revenue growth, we're expecting at around 19% coming in for the company. Revenue is expected at 10,684 crores. Profits seeing a jump up of around 14%, while margins, we're expecting them to be almost flattish. Slight bit of a decline in terms of margins, contraction there. 12.5% is what we're expecting the margins versus 12.9%. Now revenue growth, obviously what's leading the revenue growth, because there was Akshaya Tritiya as well as the wedding season that was there in May and June. So that was something that is supporting the revenue growth of the company. Margins contraction coming in there because of the gold price volatility that we've seen coming in, and jewelry business, which accounts for around 80% of their revenues over there. We're expecting that according to the Q1 update, it's expected to see a growth of around 21%, and EBIT margins for jewelry business is expected to see a decline coming in, mainly because they had a one-off in the base quarter due to some inventory gain. So because of that, we are expecting that jewelry EBIT margin to decline over there. Now in terms of other segments, eye care division expected to see a growth of 10%. Fragrances and fashion accessories expected to see a growth of 11% as well. Watches wearable, a 13% growth over there as well. And what is exciting, that we're expecting a good growth coming in from these new growth engines, that's wearables, Tenera, as well as CaratLane, which will be expected to see a good growth. Let's watch out for the commentary in terms of the demand outlook for the company, product mix of the company, started ratio, how is that shaping up, while sustainable volume growth, what's the outlook on that front, is something that we're keeping an eye out on.
Thanks, Vinny, for that. But before I get to the BTST ideas, let me address the 3 or 4 earnings that we've got in the last few minutes. Welspun Enterprises has spiked as much as 10%. The net profit of the company has come in at 94 crores versus 25 crore last year. So a big jump, and that's why the stock is higher by 9%. You also have Godrej Agrovet, wherein the revenue has come in, rather the profit, I beg your pardon, has come in at 105 crores versus 82 crore last year. So that too is seeing a bit of a spike, because versus the expectation, the number is actually better. Can't say the same about Maruti Suzuki, because the auto sales data is just out and it doesn't look like it's a big beat coming in, because versus our expectation, the number of Maruti Suzuki for the month gone by is actually on the tepid side, and that's why the stock continues to reel under pressure, down about 1%. But what's the BTST idea that you can that you should be riding home with? Let's go across to Kunal and Naresh to try and get that. Naresh, what's the overnight position that you're suggesting to hold on to?
So first is a buy on UBL, United Breweries Limited. Good follow-up move today. Stop loss at 1570, target price of 1650. Second is a sell on Polycab, a revised stop loss at 4650 and a target price of 4550.
What about you, Kunal? Apart from United Breweries that Naresh is positive on, what's your BTST idea?
Voltas is the first stock which I would suggest as a buy, and after quite some time the stock is coming back to a breakout point at 790 plus levels. So would suggest a buy with 820 as a BTST target, stop loss at 786. And the second is Tata Chemicals. Many of the chemical stocks like SRF, etc., they've seen a very strong bounce back for themselves. So I'm expecting the same for Tata Chemicals going forward. Targets of 1140, stop loss at 1040.
I'll go back to the Maruti numbers, and there you go. You know, Nisha, we are not realizing that sedan sales are not there.
Yeah, it's only
And
SUVs.
you know, while you are launching SUVs, in SUVs you don't have 50% market share. So if more SUV cars are being sold. See, for every small car that was sold few years ago, out of
Half
10
of it
cars
was
sold, 6 were
Maruti.
Maruti.
Yeah.
Now, of every sedan car which is being sold, and which is by the way almost 50% of the car market now, I mean it is in middle 40s, 40 to 50%.
45-ish, yeah.
Maruti has only 20% market share, and that was not even 20. I mean that's really, I mean I'll be extending it by 2-3% if I say 20. It is actually in mid-teens. So out of every 10 SUVs which have been sold, only 2 are Maruti. Now that is the challenge. My fear is, and you know, 45 seconds to go, so maybe that's not the conversation you want to have in just 30 seconds before the bell. But I think the loss in sedan is going to be the limiting factor for them. I mean, if Maruti was so confident, then why have they increased their marketing expense? The margins have come down, even though the commodity tailwind was there. Because you are spending a lot in new launches of SUV and establishing that you got the mix right, and also ensuring that the sedan does not lose its mojo. I mean, that is like the butter in the bread for Maruti, frankly, if you ask me, in terms of the leadership in the small car segment. Godrej Agrovet numbers have just come out. I mean, this is one of the rare companies where profits have gone down, even though it's in the agrarian space. They make a lot of business. They make a lot of product category in the animal husbandry or animal food business, where they've got a massive uptide which has happened largely because when there is a spike in milk, you will always see more and more cattle grazing will start, and more milk production in a sense will move to the organized market. But markets meanwhile 17 points lower for the Nifty. Breadth was positive. Escorts yo-yo right for the stock. The small cap index has closed in the green, and for me that is like the Khatare ka, well, I wouldn't say Khatare ka ghanti, but I would say the yellow light, which is that if I look at the top 5 or top 10 traded counters, some of them are not the names which are very desirable names in terms of where you really want to see constructive price action, and that's where the volume action and price action has been substantially higher.
Well, yes, that's how we're ending the day for the Nifty below the mark of 19,750. But that's all the time we had on this edition of Closing Trades. Thanks so much for tuning in.